Hi there, welcome to Kneppy Invest and welcome to June 19, 2024. I did not have to look at my watch to know today's date, which I usually have to do, because today is not only my father's birthday, is also my cousin's birthday, who was born 5 days after I was. So shout out to Chris and also a shout out to my father. And of course, he's quite important because without my father and of course my mother, I would not be here today. In fact, shout out to all my ancestors, because if one of my ancestors made a one different decision in their life, there is a strong possibility, probably not only a strong possibility, 100% possibility, I would not be here today. In fact, that could be said for most people. I think if one random person out there made a different decision, I might not be here today. So I do feel lucky to be alive. And I love life, put it that way. Anyway, a full agenda for today's video, fairly similar to other videos. So what I'll do is I'll have a look at one tweet, and that tweet is on Nvidia, and not only on Nvidia, also Microsoft and also Cisco. Have a look at an article I was reading yesterday in regards to ARK Invest bull and bear cases for Tesla. And I do find their bull and bear cases for Tesla over the next 5 years to be interesting. And in fact, I'd say their bear case is most people's ultra bull case. And you'll understand why in a moment. Also have a look at a book I'm reading, and I did find a link to this book, a book that was written about 70 years ago. I can't remember where I got this link from, but it was in the past 24 hours. It was some video or some email. So have a look at that. We'll have a look. I'll show you that particular book. And then we'll have a look at the ASX today, have a look at the best and worst performing indices, sectors, and also companies. And then, of course, finish the video. Actually, not finish the video. Then we'll go into the top 5 announcements of the day and then finish the video looking at some charts. And I do have a few ideas when it comes to the charts. Okay, so let's get stuck into it. First thing I want to do is look at the tweet. So, and by the way, I only have 15 minutes left of trading today. So current time is 3:55 p.m. That's correct. Anyway, this is a tweet. You might have heard today that Nvidia has now become the most valuable public company in the world, passing Microsoft. What was interesting, if you go back 24 years ago to 2000, there was an article from New York Times, Cisco briefly tops Microsoft as the world's most valuable firm. Just shows you how mighty Microsoft has been, that it features in both of these articles. Now, I do not think Nvidia will maintain its perch on top of the ladder, because I do have high ambitions for Microsoft. And I think eventually the tailwinds behind Nvidia will, I won't say they'll come to an end, but they will weaken, lighten into maybe a zephyr. And I am very highly, have a lot of, I wouldn't say ambitions, but I do think quite highly on Microsoft and what they're doing in AI as well. Anyway, so that's what's happened in the last 24 hours. Nvidia has overtaken Microsoft, and Apple is not that far behind because of what's happened with Apple's share price in the past week or so. Okay. Now, this is the ARK Invest article I was reading. I think this might be coming from their big ideas or something to do with their big ideas. And this was an article that was written, ARK's expected value for Tesla in 2029. So this was released on the June 9th, 12th. So 1 week ago, 2,600 per share. So what is the current share price of Tesla? It's not nowhere near that. It's much lower than that. So Tesla's share price is currently 184.86. So they're thinking it will increase by tenfold over the next 5 years, which means the market cap of Tesla will be approaching $6 billion in 5 years' time. What I found really interesting about this, and I do think people should maybe not read this, but have an interest in this, because they go through how they evaluate, we'll get to that valuation of Tesla. So they have a bear case and a bull case. But what was interesting is this little section, example, bear and bull outcomes. And they go through cars sold, electric vehicle revenue, autonomous ride-hail revenue, total gross margins, total EBIT margins, market cap, share price and CAGR, and free cash flow yield. So let's just zoom in on this a little bit. And this is really interesting. So They expect cars sold to increase from 1.8 million in 2023 to between 5.8 million for the bear case and 14.4 million in the bull case. I still think that bear case is a little bit too optimistic. That's just my opinion, and I'm a sharer of Tesla. Electric vehicle revenue. Now it's 81 billion. They expect that to be between 250 and 394 billion. But here is where we get to this pie sky. What's the word? I was going to say pie sky scenarios. Here we get to the ultra fantastic forecast from ARK Invest. Autonomous ride hail revenue, billions of dollars. 2023, $603 billion in the bear case, $951 billion in their bull case. So their bear case is just too fantastic. It's just out there. It's way too high, way too high. They're not being conservative enough, in my opinion, when they're looking at their bear case. The bear case is zero when it comes to autonomous ride hail revenue, and they're not being truthful with themselves. Total gross margins, 18% right now. They think, well, for some reason, they think the bear case is actually higher than the bull case. Not sure about that, but they do think it's going to be over 50%. Again, I'm not sure. Now, I do understand why they're thinking that, because they believe Tesla will become more of a software company, and those margins will increase if that actually does happen. Hence the autonomous ride hail. If that does come to fruition, yeah, their gross margins will increase. Total EBITDA margins increasing, almost doubling to 32%. In fact, they have no leeway there. They actually think gross total EBITDA margins will be 32%, no matter what. Enterprise value to EBITDA, 16.8 to 18.1. So they think the company will be better value in 2029. Even though the market cap of the company is going to be between 7 and 10.9 trillion dollars, and CAGR for the share price between 56% and 69%. Yeah, so I think they're being a little bit too high. Maybe they're being smoking the old when they're doing these evaluations. I just can't believe autonomous ride hail bear case 603 billion. Come on, their bear case is $0. Anyway, so that's an interesting article from ARK Invests. And here is the book I'm reading. I got this link from Drive Google. Don't know where I got this link from. So it's How I Made $2 Million in the Stock Market by Nicholas Darvas. So I've started reading it, and it's a fantastic story of how this guy, who was a dancer, I had no idea, was a dancer, how he became a trader. Goes through his whole story, and the story is absolutely fascinating. That's within the first about 25 to maybe 30 pages. So I'm already about 30 pages in. In fact, I can tell you right now where I'm up to. The technician, yeah, here it is, developing the box story. So that's 37 pages. So it's just fascinating. How quickly he progressed, how many mistakes he made, and he went from being an absolute novice to developing this technique that a lot of people do use. Darvas boxes, that sort of thing. If you don't know what Darvas boxes are, in fact, I don't use them all that much, but I do know about them. Darvas boxes. Here's an image of one. Here he is. Yeah, I do like them, but I don't use them all that much. It's these little boxes, and I can't explain any more than that. Anyway, so that's the book I'm reading now, and hopefully he gets into detail about Darvas boxes and that sort of thing. Developing the box theory. What I actually will also do is look at a few comments as well. Hopefully I'll get through a few of these. So let's have a look at a few comments. So Ryan Corral says, what's happening with NNG Nexion Group? I have no idea. I don't really follow that company. I have a feeling this company's not trading right now. I do have that feeling because I had a look at the chart a while ago, and the chart actually looked really good. So there's this really big update. The last day it's trading, some really good volume coming in, but that was on the 22nd of April. So this company hasn't traded since the 22nd of April 2024. So what is going on with Nexion? I haven't really delved deeply into this. So you notice there's no buyers or sellers because the company shares are suspended right now. So looks like, just based off the last announcements, something to do with financing. That's what I'm assuming here. NNG, convertible note financing, continuation of voluntary suspension. What I'm going to do is just extend this by 3 months. Okay. So there was a price query from the company on the 24th of April, and so they answered that. That's probably why they went to trading halt initially. So I have no idea. This is exciting. No idea what's happening here. So it sounds like that went to a trading halt because the share price rose a lot. But that's weird that they haven't been trading since. Okay. No, they went to a trading halt pending an announcement regarding a material acquisition. Okay. So possibly the ASX price query, I have a feeling in the first question they're going to answer yes. This could be one of those cases where the company answers yes in the first question. And yes, they have answered yes. So is Nexion Group aware of any information concerning that has not been announced to the market, which, if known by some in the market, could explain the recent trading in its securities? They've answered yes because of this acquisition. So obviously there were some loose lips. So they said yes, he's in the process of conducting a negotiation for a material acquisition. So what's happening with his acquisition? So I'm assuming that is what's going on. So maybe they need some funding for this acquisition. So let's see the reason why they are suspended. So exciting, learning new stuff about a company. Pending a material acquisition, suspension will be raised or lifted 13th of May 2024. That was a while back. That's a month ago. And continuation of voluntary suspension. What is happening here? Give us reasons why. Okay, the project to complete the transaction contemplated is ongoing and directors are pleased with progress. Okay, and that's the most recent continuation of voluntary suspension was on the 3rd of June. And they said the same thing. The proposed transaction is significant and demanding. We continue to make good progress and the directors are satisfied with achievements to date. And the last thing I just want to see is this convertible note finance may have nothing to do with its acquisition. So let's have a look. It's probably a lot of jargon. Pleased to announce it has executed convertible note agreements for the issue of a total of 7.8 million convertible notes, each with a face value of 10 cents, each to raise a total of 730,000, blah, blah, blah. Okay, purpose of the issue is to raise funds to contribute to costs incurred for a proposed acquisition as first announced on the 23rd of April. So it's just an acquisition. And it seems like this acquisition is taking a little bit of time. So that's the whole reason. And seemingly, based off the last day traded, share price rose 25% on that day after rising 6%. In fact, if you look, the share price rose by about 67% over a week. From the 15th of April to 22nd of April. And I think probably would assume a lot of that was because of loose lips and someone knew about this acquisition. So that's what's happening with Nexion Group. Dyke said, I'm just going to like that, or gives it ABG. I'll talk about that another time. Okay, a few people mentioned that Fortescue, one of the reasons why Fortescue's share price dropped. Thank you for this, because after I recorded the video, I actually did find this out through or via an email. So an institution in the US sold $1.1 billion worth of Fortescue shares because they didn't meet their frog-friendly standards. So thank you for that, Flish. And here we go. David Gilbert said someone dumped about 58 million Fortescue shares on open. Probably buy them back on the cheap. That's what they probably should do, shouldn't they? So thank you for David Giblet for giving us that. Someone else said June is not boring on the ASX. Heaps of rockets taking off. I'm only saying boring because there's not many interesting announcements. And I'll stand by that. There's not many interesting announcements. And Adrian says, should have a look at Helios. A lot of volume is returning to the stock. Chart is interesting. And I am going to have a look at Helios chart at the end of the video, if I get there. So thank you for all those comments, people. So I'm getting through these comments fairly quickly today. But I'll have a look at ABG, which I believe is Abacus Group. It's a REIT. I'm not a big fan of REIT, but I'll still have a look at that for you, Dykes. Okay, so let's have a look at the ASX today. And closing auction has 4 minutes to go. I am so excited. One thing I want to do is have a look at DXN. I'm a shareholder of this company now. Oh, it's up. Oh, we have seen a really nice bounce with DXN. Really nice bounce. I would like a little bit higher volume coming today, but it has bounced to 6.2 cents. Not only that, it's going to rise. No matter the next trade, it's going to rise. So it looks like the selling has come to an end. Selling came to an end today when someone sold some shares at 5 cents, and that 5 cents was reached at 10:42 a.m. That was the end of the selling, and the share price has risen. I wish I bought some shares at that point, but I'm a shareholder now because I did really see the end of the selling. So I'm a shareholder of this company right now. Bought some shares today, DXN, and yeah, we'll have a look at the chart. Actually, we'll have a look at the chart for now. DXN. And I was expecting this little pullback. I wasn't sure how far the share price would drop, and we've seen a really good recovery in the share price today. Share price got very close to the short-term moving average channel, so it would have had to get down to about 4.9 cents to hit that, so very close. And the bounce today has been really good, really nice looking one-day candlestick, and continuing really good volume coming in. So that's the main thing I'm interested in this company is the volume and where they're in. They're in data centers. And they had released a really good announcement the other day. Anyway, so let's have a look at the ASX today. And overall, nice little bounce in small ords and resources since last time I looked. In fact, the whole market hasn't had a nice little bounce. Let's have a look at the XJO. Now, market index is a little bit behind. No, it's not. That's companies, individual companies, they're a little bit behind. So we have seen a little bit of bounce in the XJO. Okay, so let's have a look at the best performing sectors and indices. And energy's had a good day. Staples has had a good day, and IT. So 3 sectors up, 8 sectors down, including industrials, utilities, and financials. So bad day for financials and utilities and industrials. And gold's had a good day, small caps and resources, and banks have not had a good day. So based off this, I'm going to have a look at the ASX 20. In fact, I'm thinking of doing a video on the ASX 20 ranking the companies. And I'm thinking I'm going to put the companies in tiers. Good companies, or the best, good quality companies, down to the companies I'll probably never own in a million years. That's probably a bad way to say it, unless I'm trading them. And so we're talking about Telstra, Woodside, Santos, which I do think is or are really low quality companies. The best quality companies, more than likely, in the ASX 20, WiseTech, REA Group, Aristocrat, those sort of companies. So that's tier 1, and those other companies tier 5 or whatever. Anyway, so let's have a look. Based off this, banks are down. So I would say Santos and Woodside are up. I would also say Woolworths is up. Maybe WiseTech has had a nice little bounce today after a bad day yesterday. So I'm going to say 8 companies up, 12 down. 8 companies up, 12 down. Well, it's going to be very exciting. Well, very close. 7 up, 12 down, 1 flat. I'm going to say all the banks are down. Woodside, Santos, WiseTech, Aristocrat, REA Group, all up. So let's have a look at those percentage changes. QBE. Well, that's interesting. QBE did release an announcement today, but they did not make it into my top 5 announcements. I'm pretty sure they did. So maybe that's an oversight because share price has dropped 4.9%. So otherwise, other companies down: CBA, ANZ, Westpac, Telstra. WiseTech's down again. So I got that one wrong. I thought it might have rallied today. And REA Group's down as well. So I got that one was wrong as well. So which company's up? I'm pretty sure Woodside and Santos there. Funnily enough, National Australia Bank is up. Other banks are down. Woolworths is up as well. That is a Staples. Anyway, so that's all for the ASX 20. Now let's have a look at the top gainers today. Hopefully, a few of the companies have made it into this list. I'm pretty sure one company, more than likely company number 1, is in the worst performing companies. So let's have a look at the top gainers by percentage change. And there is nothing here. Oh, there we have WA1 Resources up 25.17%, which is quite a bit for a company that has a market cap of $1 billion. It did have a market cap of $1 billion before trading began today. Now it's up to 1.24 billion. I don't have much interest in WA1 Resources, but it did make it into my top 5 announcements of the day, coming in number 2, just because of the reaction I thought it could have garnered from the market, and the reaction has been good. company called Locality Planning Energy, almost made into my list, but looks like they have been or are being taken over. Happy to see Brookside Energy up 18%. A really cheap company on the ASX. I'm a shareholder of that company, by the way, so mind my bias. Now let's have a look by market cap. WA1 Resources, Tyro Payments, Southern Cross Gold, Southern Cross Electrical Engineering. COSOL. I'm showing you the chart for COSOL. I did see that chart, and Findy up 16.2%. I should show the chart for Findy as well. What's going on with Findy? I did see any announcements from that company. And Biomes had another good day, up another 9%. So I showed you the chart for Biome yesterday. Bit of a delayed reaction from the market in regards to announcement, but I think maybe the market is just looking at the chart and price action and volume. And AMA Group, there we have AMA Group up 7.7%. It did make it into my top 5, coming in at number 4. Okay, so let's have a look at the worst performing companies before we have a look at the top 5 announcements. And coming in as the worst performing company today is a company that did make it in my top 5. Melodial Global Health, down 56%. I had a look at this company and I was a little bit confused for a while until I realized what has happened to that company since the start of this year. And a fascinating story. Hoping no one out there listening to this is a share of that company right now. You can see 1 year down 99.58%, down 56% today. But the share price of that company has been quite volatile. And the company coming in as a top announcement of the day is in this list, down 20%. Helia Group, down 20%. Number 1 top announcement of the day. So not surprised there. Anything else there? No. So let's have a look by market cap. We have Helia Group, restaurant brands, low trading there, turnover. Pact Group, I'm pretty sure the company's been taken over. So not sure why it's down. Aspire Mining, highly volatile, so don't really care about that. And that's all she wrote, I think. A few other interesting companies here. Australian Gold and Copper down again. And Synlait Milk, well, it's down, keeps going down, doesn't it? Down she goes. Okay. So let's have a look at the top 5 announcements of the day. Starting with number 5, ME1N. Trading has finished for the day. So this is the share price at the end of the day, down 57.5%. Interesting story here. So I was a little bit confused by what's happening with this company. Okay, so the announcement today was a corporate update. So I do open these sort of announcements up. Now, they received independent appraisals for their land and building, which valued those two things at between $10.4 and $12 billion. And management seems quite pleased with how everything's performing. Follow strong revenue progress with $21.6 million in revenue delivered for financial year 23. A nice increase from the previous corresponding period, and $4.4 million of unaudited revenue for the first quarter, 91% increase on the previous corresponding period. So it seems like things are moving in the right direction. Talking about a convertible note as well, they entered into that with Harbour Capital Opportunities. So I didn't see anything overly negative in this particular announcement, but the market thought otherwise. Then I had a look at the trade history of this company, and it's just been all over the place. So, share price apparently went up 1,900% on the 13th of June. It didn't really. There was a share consolidation. I think it was a 30-1, or maybe it was a 20-1 share consolidation. It seems like it would be 21, but I have a feeling it was 30-1. And after that, share price rose 43% and 33% in consecutive days before today. Now it's dropped 57.5%, down to where the share price was. In fact, it's now lower after it did the share consolidation. So 57.5% down today. May not be because of this announcement, it's just because there's a lot of volatility. Now, what was interesting is I had a look at the chart for this company, ME1, and you get this sort of chart. And it's like, what the hell is happening? What's happening with this chart? According to this, the share price, say at the start of 2023 was $12, and back in 2021 was as high as $180. So, and then you can just see here, the share price did something weird. You can just see how the share price just changed. These one-day candlesticks change. So they did a share consolidation, and we've got the announcement somewhere here. Might have to go back. Here it is, consolidation split, 2nd of May. I think this was for the 13th of June. Okay, so I'm pretty sure this was a 20-for-1. If you have a look at these sort of announcements, there's a lot going on for some of them because this company has a lot of options, that sort of thing. You have to go down to the bottom. I think it's the bottom. Maybe it's just above this section. Here it is. It was a 30-to-1 consolidation. So the amount of shares has decreased by 30-fold. Now, what was interesting was when I have a look at this chart, it seemed like a similar thing happened in January of this year. And I was like, no, surely this company did not do two share consolidations in the 1 year. So I went back to the trade history. If you go back to January, the share price on the 6th of February rose 1,200%. It went from 0.1 cents to 1.3 cents. And yes, the company did a share consolidation back in February of this year. So 4 months ago, share price rose to 1.3 cents and fell all the way from 1.3 cents back down to 1 or 0.1 cent. So this company has done two share consolidations in 1 year. In fact, I'm pretty sure this was a 20-for-1 consolidation. The one recently was a 30-for-1, which means if you add those together, it's not a 50-to-1, it's a 600-to-1 share consolidation just this year. And the last time they did share consolidation, back in February of this year, share price dropped all the way back down to 0.1 cents. So that's the reason why they did it in the first place. Share price was 0.1 cent. And if you follow the share or the trading of this company, it kept on dropping throughout the rest of the year, all the way back down to 0.1 cents. Now they've done another share consolidation, and the share price is, I think, falling back down to 0.1 cents again. Anyway, I have no interest in this company because of these two share consolidations in the 1 year. This is a reason why a lot of investors hate share consolidations. Typically, it's a good thing because you'd want the share price not to be below 1 cent. When a share price is below 1 cent, I would not even have a look at that company because you just get pip traders. That's all there is. And I'm just going to have a look at this company's most recent Appendix 4C. Because if you look at the corporate update today, it didn't sound all that bad, did it? Have a look at it. It didn't sound that bad. So I'm just going to have a look at their most recent Appendix 4C. Is this company burning through a lot of cash? Yet it's still burning through cash. Receipts about $5 million. Operating cash flow negative by 1.1 million. Seems like I have a little bit of debt too. Maybe. Section 7. Have a little bit of debt, not a lot of debt, about $3 million of debt. Not that much, but it's still debt. And this company right now has a markup. What is it? Markup of, well, it says 637 trillion. That's not right. I have no idea what the markup of this company is right now, but I have no interest in Melodial Global Health. Coming in number 5, just because really interesting shenanigans with the company. I've never seen two share consolidations in the same year within 4 months of each other. That's just absurd. So you always see new things on the ASX all the time that you've never seen before after 15 years of trading or investing. Never seen that before. So I just had to include it into top 5 announcements. Now, let's have a look at QBE. Sorry, I should have done actually QBE first. Down 4.3% on a middle market strategic review and first half 24 performance. So obviously the market didn't like that because the share price is down 4.3%. And I should have had a look at QBE Insurance before I started this video. I actually didn't even have a look. I had a look at the other companies. So let's have a look at QBE's chart. The chart had been looking good. I'm not that interested in health or insurance companies. Not interested at all. I don't think these are high quality companies. Insurance is a hard thing to do, in my opinion. And these companies have been benefiting from higher interest rates because they have their premiums that they put aside and they get better returns on those premiums. And if interest rates start falling, I have no doubt these companies' share price will start moving down as well. Anyway, so QBE Insurance down 4.8% today. Honourable mention. We'll put that as an honourable mention. Coming in number 4, we have AMA Group, another company. Well, actually, not another company. A company whose chart looks absolutely terrible, but they did release a business update today. And I would definitely call this a low quality company. Really low margins. They can have tremendous revenue and very little profit. Say they could have $1 billion of revenue and virtually no profit. In fact, let's have a look. Let's see if that is true. Where is Finchat? There it is. So AMA Group. So this is smash repairs, that sort of thing. Smash repair company and AMA Group. I've received questions about this company in the past, but let's have a look at this company's revenue over the past 10 years. So almost $1 billion of revenue, but income or profits, let's go all the way down to profits. Profits have been negative the last 5 years, well, the last 4 years, because the last column here is actually the last 12 months or the trailing 12 months. So loss making the last 4 years, and even before that, fairly low profits on the revenue this company was generating. And you can have a look at that, just having a look at the ratios, margins. So we're looking at gross margins of 54%, but then EBITDA margins 2%, operating margins 1.7%. So really low margins, which is an indication that this company has no pricing power, no moat, and really smash repairs. What sort of moat does a smash repair company have unless it's really good talent? Unless they have a really good mechanic or something like that, or smash repair person. Anyway, so AMA Group has had a good day, but chart looks horrendous. And the chart keeps going down. Share price just keeps on going down. No reason to be interested in this company, for me to be interested in this company because of this chart and because this company is a low quality company. That's just me. You could be different. And the other thing is, says market cap is 72.3 million. I'm pretty sure this company has pretty high debts, pretty big debts. In fact, let's go back to Finchat and let's have a look at their balance sheet. Let's have a look. Do they have debts here? Liabilities, long-term debt. They have, well, the debt's decreasing. That's long-term debts, short-term borrowings. They have nothing there. So it looks like they are decreasing their debt, but they still have a fair bit of debt. In fact, the debt is almost the same as the market. Not quite, a little bit lower. I thought they would have had a little bit more debt than that. In fact, I'm going to have a look at this company's last... Where is it? By the way, this company does release an Appendix 4C. So I'm going to open that up as well. And I'm going to open up their half-year report as well. I just want to see their debt. And you can see this company exists on really low margins just by looking at their Appendix 4C. So company had $223 million of receipts and was operating cash flow positive by $1.8 million. Property, plant, and equipment, $3.6 million. So the company was operating cash flow positive in this quarter, but was free cash flow negative. That's the problem with these sort of companies, is they exist on very low margins, and just a smaller shock can, I won't say destroy the business, but it can really harm the business. So maybe they don't have, I'm just going to confirm that debt. They don't have debt here. I hate that. They've got lease liabilities, other financial liabilities. I'm assuming that is debt. It says D3. And other financial liabilities, D3, 130 million. So possibly this company has debt of about 175 million. So let's go to D3. D3 should be their debt. Say current, bank loan, 130 million. Convertible note, 45 million. So their debt is 176 million, not 45 million. So I just wanted to confirm that. So I'm very happy I did. So that's probably what I thought this company had. So don't ignore the debt when you are looking at this company, if you have a look at this company. So that's coming in number 3 or 4. We have AMA Group. Coming in at number 3, we have a company I don't know much about, Change Financial, but the company is up 13% today on a trading update. And we're always going to have a look at a company that releases a trading update. That does sound interesting enough, and I'm happy the share price is up. So nice increase in revenue. It sounds all good here. I'm not going to talk about the numbers, but they all sound good. Everything's moving in the right direction. Increase due to transaction volumes, migration of New Zealand financial institution clients. And then when I saw that, I had a look at what this company does because it sounds like it's sort of like a software company, PaaS. So it's not software as a service, it's payments as a service. I think that's what that is. Payment as a service. Do they actually say that here? They don't give a definition of PaaS. I'm pretty sure it's payment as a service. Okay, so let's go have a look at the BAT section. And they actually do define PaaS. So Change Financial is a global fintech leveraging innovative and a scalable technology to provide tailored payment solutions, card issuing, and testing to banks and fintechs. Tells me, well, sort of is in the right direction of what they do, but I want a little bit more information. And you get that information in the second paragraph. Changes payments as a service platform Vertixon seamlessly integrates with banks and fintech core systems, enabling delivery of digital and virtual card solutions to their customers. It includes integrated features such as Apple Pay, Google Pay, Samsung Pay, and Buy Now Pay Later services. Change currently manages and processes over 27 million credit, debit, and prepaid cards worldwide. And they have a little bit more in the third paragraph. Okay, so the next thing I had a look at was the company's Appendix 4C. I just want to see how this company is performing financially. So a nice little trading update. Things are moving in the right direction for the company. But I just want to see if there's anything to grab my attention a little bit further. And in these sort of situations, I just go to the company's Appendix 4C. And I noticed the company is operating cash flow positive in the most recent quarter. Now, operating cash flow positive, but they did spend $431,000 on intellectual property in the investing activities. I believe that is capitalized research and development, and I probably would include that as an operating expense, just my opinion, but that would mean the company is not quite hitting that inflection point. Very close, but not quite there. But they are close. So a little bit more interest, and then I had a look at the chart. And this is where I just lose interest. Share price not doing much. Share price was in a downtrend, not really in any sort of trend right now. So going sideways, fair bit of volatility in there. Share price trading between 4.5 cents and 8 cents as a high. And the volume has not really expanded over the past 6 months to 1 year. In fact, you could say as the share price started to going sideways, the volume started to decrease. So a good volume today, I'll give you that. Nice volume today, but not a lot of interest in this company right now. The other thing is the market. I can't remember, I did have a look at this, but was it 30 million or something? 43.9 million. So if this company's market cap was a little bit lower, I could be a little bit more interested. But at this point in time, I will put this company, I'm pretty sure I have this company in one of my watch lists. No, I don't have this company in none of my watch lists. Where would I put this? I'll put this in financials. No, I'll put this in software. IT, tech, and software. There we go. So that's coming in number 3. We have, what's it called again? Change Financial, CCA. Coming in number 2, we have a company I don't have much interest in. It's a mining company, exploring mining company, but you have to acknowledge share price rising 27.6%. Now, I'm not even going to open up this particular announcement because it's a metallurgical results from their project, West Arunta project. So they released assay results 2 weeks ago on the 3rd of June. The market didn't like it. Now they released the metallurgical results. The market liked it, up 27.64%. And you can just see the trade history. So when they released the assay results, share price down 14%. The day before, the share price was $21.20. Share price just kept on falling. In fact, the company had 1, 2, 3, 4, 5, 6, 7, 8, 9 down days out of 10. So one update in there. Share price recovered yesterday, up 7.9%. And I did notice that. I went, oh, this could be a nice little trade, possible trade. Probably would like a little bit more volume. Volume today has been fairly light. on share price increasing 27.6%. That's actually not a good sign. You want to see a lot of interest. This was on fairly low interest. And what I mean low interest, volume 780,000. But when the share price, the day before the day before they released their assay results, there was 2.5 million shares traded. And we have seen a few days where shares traded is over 1 million. So I probably would have liked to see a little bit more volume today for this to excite me a little bit more, although I'm not that excited, because this is Niobium. I actually did open this up, but I just sold Niobium. I have zero expertise in reading Niobium results. NBT02, 51% at 62% recovery. So it seems like the market is excited by that, those numbers. And let's have a look at the chart. And I'm just wondering, maybe this could be a day trader's plaything. So I will give this. One of the reasons why this came onto my radar yesterday is just because where the share price started to bounce off the longer term moving average channel. It's a perfect bounce. And today, yeah, share price and the one-day candlestick is absolutely beautiful. Totally different than the one we saw on the 3rd of June. But this is a mining company. Not only a mining company, it's an exploring mining company with a market cap above $1 billion. And I'm being more selective when it comes to mining companies. But otherwise, if I was just trading a chart, I would like this chart. Would like the chart. So that's coming in number 2. We have WA1 Resources. Coming in number 1, we have, was it Helia? Helia Group. Down 20.85%. For a company that has a market cap, I'm assuming it's like $1 billion. Let's confirm that. I'm assuming it's it's now below $1 billion. And I'm pretty sure market index market cap is or adjusts as the share price moves during the day. Other platforms, you don't see that. Says the P ratio is 3.94. Dividend yield 17.66%. Is that right? That's probably a dividend trap. Anyway, so what's happened today with Helia Group? Now, this is another company I don't know much about. Update on CBA contract. And this was an announcement I did miss. And then I did see that this company was down a lot. So I had a closer look at this particular announcement. And it seems this could be negative. Well, we know it could be negative just by the reaction. So Helia Group has been advised by the Commonwealth Bank of its intention to issue a request for proposal relating to its external lenders' mortgage insurance requirements for the whole CBA Group. So it looks like possibly CBA is using their power to adjust the terms or this particular relationship with Helia. Apart from that, don't know much else about this particular contract. However, so it says here, next paragraph, Helia is an LMI provider to CBA of new high loan to value ratio residential mortgage loans. It also says here, LMI business underwritten under this contract represented approximately 53% of Helia's gross written premium in financial year 23. Now, the CEO and managing director of Helia says that Helia has provided CBA with LMI for more than 50 years, and we welcome the opportunity to continue and extend our relationship. But I'm pretty sure CBA is trying to flex their power with Helia Group and maybe increase the margins or increase the profits by, I have no idea, by improving their contract terms with Helia Group. And that's probably what the market is thinking right now. That's what I'm assuming. I could be completely wrong, by the way. But let's have a look at the chart for Helia Group. Anyway, so what is interesting is the chart for Helia Group looked really good, didn't it? And then there was a day, was it the results? Yeah, the 28th of February. I'm pretty sure this is the results. Share price dropped 10% on the day and just kept on dropping. Share price also dropped 13.8% on the 7th of March. I'm going to have a look what happened that day. 7th of March. Okay. We'll have to go back a little bit further. There's nothing. They released the results on the 27th of February, which is the day before the share price dropped, which is interesting in itself. The day they released the results, the share price rose 7.8%. Then the day after, the share price dropped 10%. There's no news flow. This company, yeah, I'm not sure. They're doing a buyback. Trading update on the 2nd of May. What happened on the 2nd of May? Share price dropped a little bit. Then we have this. And this chart looks nasty now because of what happened today. Even the weekly chart doesn't look that enticing. Anyway, so when a share price drops 20% in one day, I am going to have a look and try to understand why. Now, a few other companies did not make it into my top 5 announcements of the day. A few REITs, Region, it's called Region, RGN. Region Group did a property valuations announcement yesterday evening, but also DXI, sorry, DXI, which is Dexus Industria, did the same thing or released the same sort of announcement today. Property valuation update. Share price dropped 3.3%, so the market didn't like that. But also Dexus Convenience Retail released the same sort of announcement, a portfolio valuation update. And I'm pretty sure both Dexus Convenience and Dexus Industrial had to lower the valuation of their property by a little bit. But it seems like the market didn't mind this revaluation. Other companies, I've already talked about Fortescue. Botanix is in a trading halt. This is the missed opportunity. A trading halt, and I thought when I saw the trading halt, might be a capital raising, maybe. Usually the first thing I think of is capital raisings, but most of the time I'm wrong. Announcement regarding FDA approval of Softra. Now, I know nothing about this company, but this is the type of announcement that would get me interested. So I'm looking forward to Botanix announcement in regarding to the FDA approval of Softra, and based off the buy bids, the market does think this is going to be a good announcement from Botanix. Gap, Gale Pacific, sorry, close to becoming getting into my top 5 announcements because they did release a trading update, an earnings update. It was negative. So I'm a little bit surprised the share price has not decreased by as much, but obviously the market thought, this sort of trading update is going to happen. Look at that chart. It's an ugly looking chart. So I'm pretty sure the market expected this negative trading update. By the way, Botanix chart looks really good. This is Botanix chart. Good things happen. Oh, by the way, we should look at the daily chart. Good things happen to those companies whose chart's in a beautiful uptrend. And this is a beautiful uptrend, isn't it? Can't say it's not. Other companies, Kina had some fraud, and then today they sort of upgraded correction to earnings impact. And that's it for the honorable mentions. Okay, so let's have a look at charts. The first chart I want to look at is COSOL. So I was looking at this one really closely yesterday, and this is a really good pattern. So the share price of COSOL rallied fairly strongly on the 22nd and 23rd of May. So up 8% on one day, 3.1% the next day. And then share price just went sideways for about 2 weeks, from 24th of May through to the 18th of June. So almost 1 month, share price just went sideways. And then all of a sudden today, share price jumps 8%, 7.8% today. That's a beautiful signal. Share price going sideways after a nice run. So if we see that again, could be a good time to add to my trading position in this company. There's me buying at 96.5 cents. And funny enough, I was looking at this yesterday. I was thinking, could I have timed this a little bit better? And then I went through all the charts, and I'll show you that my thoughts in a second in regards to that. Helios. So someone did mention Helios. Who mentioned this? Helios. Adrian Seren. Is it Adriana or Adrian? Helios is starting to maybe turn, Helios. But it's saying that you could have said the same thing here. It's starting to turn. This was back over a year ago. Even further back. No. So it did. Oh, I'm losing. Hopefully I can get through this video without losing my power for my mouse. So it did start it was looking like it was going to turn in April, May of last year. So similar thing here. Probably would like. I think Adrian did say something about volume. A lot of volume is returning to stock. I'm not sure about that. according to Training View, there is actually not a lot of volume right now. Um, Although you could say, if you go back from November to now, there has been a peak in volume. So, and yeah, so I actually will give you that. If you look at the longer term, there has been an increase in volume over the last 6 months, but not the last few days. But this chart is starting to look a little bit more interesting. Helia Group. Also, Findy is all-time high. Yeah, I don't know why the share price is up 16% today, because the company released no information. Volume was not that good when you look at the past, but this is a perfect uptrend chart. Massive increase in volume compared to what we saw 1 year ago. Look at the volume back in June, July last year. There was no volume compared to now. This is a very definition of, this is the thing you should be looking for. Increase in volume. You want heightened interest in a company, and that heightened interest increases the share price. So when a share price moves into an uptrend, you want to see increased volume. We see that with Findy. Unfortunately, I took some profits along the way. Maybe I should have done that. But my position in Findy was becoming too large, and I was becoming uncomfortable. Now my position in Findy is such that is now in my top 25 holdings, just because the share price keeps on increasing. Else, a Biome. We looked at Biome yesterday. Well, we didn't, I did. And another nice day for Biome. Now, this is a case where I want to see a pullback. I wouldn't be buying right now for Biome. I would expect a little bit of a pullback. And AGC, Australian Gold and Copper, has been highly volatile. And right now, the share price of this company is in a sweet spot, a possible support zone. Sort of like what I was looking for with DXN. I was waiting for the share price of this company to get into the short-term moving average channel. It got close, and then it has zoomed higher. Now, I was talking about yesterday after I recorded the video, I was just going through the charts and wondering, can I time my positions better? So looking at cost, I was like, I bought at 96.5 cents. Share price dipped into this short-term moving average channel, and we saw it continually over the next few months. Share price keeps on falling into short-term moving average channel. It didn't, with this consolidation period, it didn't dip into that channel, but it went sideways. That's a good sign. So I went through a few other charts. So Shape Australia did the same thing. We saw a dip, but this was a dividend. And the share price on occasion falls into the short-term moving average channel. These are the situations where it could be, or add to my position, my winning position in these companies. That's what I'm thinking of doing, adding to my position, where you see these little bit of a dips. I was thinking of doing that with Superloop. So share price keeps on dipping into the short-term moving average channel and then goes higher. It continually does. It's done it 1, 2, 3. It's done about 8 or 9 times in the past few months. Life 360, not quite. We did see a dip, but that was based off their American listing, and the share price has rallied. So we haven't really seen a dip. But leading up to that, we did see a few dips. Now, this was an instance where if I waited for that dip into the short-term moving average channel, it would have paid off, because I bought on the day they released some sort of, this was a half-year results, if I remember correctly. Share price on that day rallied 38%, and I bought on that day, and that was, share price has not been lower since then, since I bought. So we haven't seen the dip, but we have seen common in a few other companies. It could be just simply because this particular announcement was so powerful, so strong. Tours. There's me buying on a breakout, but we did see dips. But the dips haven't been or weren't that much lower than when I bought, the share price I bought. But we did see a few dips into the short-term moving average channel. Share price keeps going higher. Fisher and Paykel. This is another one where I bought a breakout. Their share price dipped almost immediately, but then have a look at the share price, what it keeps doing. Nice little dip here on the 28th of May, and then ran higher. Southern Cross Electrical Engineering. So I have added to this position, $1.59, but look what happened. Just recently, share price moved into the short-term moving average channel and has taken off. And I'd love to see the share price of this company get above $1.68. Ooh, actually, pretty good day for Southern Cross Electrical Engineering. My state, it's a little bit different. This was me anticipating a breakout, and the share price has broken out. Share price is in an uptrend. In fact, it moved to an uptrend well before I bought it, but share price is moving higher. And I like this company as well because it's cheap. Now, this is an instance where we have seen a dip, a few dips, Orica, and right now we have seen the share price move below the short-term moving average channel. So this could be a sign of weakness coming into Orica. So have to keep a close eye on this, or the chart for this company, because we haven't seen the share price take off. So just after this dip on the 30th of May, share price wanted to take off, but it was weak, and then the share price has dropped. So this chart is actually looking a little bit weak. Master Rock or Meta Rock, I do like this chart, but this is a longer term trading position. So I don't really care as much about these little dips here. GQG, yeah, this is a beautiful chart where we see dips into the short-term moving average channel. Share price takes off. We've seen it numerous times, and I was late to the party for this one as well, but it's okay to be late to the party. Share price of this company is now up almost 20% from when I bought. Ansell, this is a weird one. The chart doesn't look that good. I thought this was a breakout. It was a bad one-day candlestick though in introspection. In hindsight, a red candlestick. There was a little bit selling, but I have not sold out my position, and I'm thankful because now the share price is higher from when I bought. But I could have timed this a little bit different or be a little bit more patient because of that one-day candlestick. With Thrive 360, I waited all day and then I bought towards the end of trading because it was going to be a very bullish one-day candlestick. With I should have done the same thing, or Ansell, should have just waited. I've made this mistake a few times where I just couldn't wait. I just had to buy during the trading, initial parts of the day of trading. AGL, this is when I have added to my position on once. So I bought at 9.18. This was preempting a breakout, and then the company released some good news on the 7th of May, and we have seen a bit of a dip, but I like to see a little bit more strength in this chart. Share price is struggling to get above $10.60. Integrated Research, this is a great one. I love this one. So I was a little bit too early with my 77 cents adding to my position. So bought way back here, and then we had the breakout, without a doubt breakout. I saw a little bit of a dip on the 16th of May, so I bought some more shares, but we saw the real good dip on the 11th of June. Not sure why anyone was selling on that day. Share price fell 10%, but look what's happened to the share price since. And I can tell you, some people sold on that day and are regretting it right now because the share price has gone from 63 cents at the bottom of that day back up to 75 cents. So that's a really good one. And that was a perfect time to have bought the dip onto or into the short-term moving average channel. And I'll probably stop it there because we're getting a bit too much time. So getting towards an hour longer video, I think. Anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.